Right now, the headlines are telling you one story about the market, but the money, it's telling a completely different one. Today, we're going to pull back the curtain and look at the hidden economic forces that are really driving things, the stuff the 24-hour news cycle is totally missing. Okay, let's just dive right into this, because it feels like a classic case of whiplash, doesn't it? I mean, just a few weeks ago, all you heard was doom and gloom. Headlines were screaming about a potential war in Iran and the market chaos that would follow. But then, look at the reality. The market didn't just survive, it took off, with the S&P 500 smashing new all-time highs. This huge disconnect is exactly what we need to figure out. And, this isn't the first time we've seen this play out. Widespread media panic, it so often happens right before the market makes a big move in the complete opposite direction. So you gotta ask yourself, what's really going on here? Is all that panic a genuine warning? Or is it, like this quote says, a massive buy signal in disguise? To get why the market had such a strange reaction, we have to tear apart the actual geopolitical outcome. The market's logic starts to make a lot more sense when we look at the real winners and losers, not just the ones the headlines were talking about. And wow, just look at this contrast. The media story was that China was the quiet winner here. The reality? A major loser, with its energy security now in a really tough spot. The US, it actually came out of this in a stronger position with even more control over global energy. And Iran, well, despite all the tough talk, its economy, which was already on the ropes, has been pushed to the absolute brink. So that fear that was gripping the markets, it didn't just fade away. It's like it was replaced overnight by this huge wave of euphoria. The entire mood just flipped to total optimism. But this sudden rush of bullishness, this feeling that the market can only go up, well, that creates its own new and maybe even more dangerous kind of risk. The S&P 500 didn't just dodge a bullet, it shattered all expectations, blowing right past 7,000. That's not a recovery, that's a massive statement of confidence from the market. And this feeling wasn't just in the broader market. The tech-heavy Nasdaq 100 went on an absolute tear, an incredible 11-day winning streak. I mean, this is the kind of nonstop buying that just shows you how one-sided, how completely optimistic the market has become. And here's the kicker. History shows that when literally everyone agrees, when all the commentary is positive and everybody is making risky, speculative bets that prices will keep rising, it's often a signal that the market is getting dangerously overheated. It's the classic sign of complacency. Okay, so to understand what the next potential shock to the system could be, we have to look away from the cheering stock tickers for a minute. We need to focus on the economic reality on the ground in Iran. The situation there was already pretty bad before the conflict, and what's happened since, well, it's a catastrophe. The conflict has left an estimated 12 million people out of a job. And look, that's not just a statistic, that's a massive social and economic crisis that's happening right now, in real time. And if you're trying to wrap your head around that 12 million number, think of it this way. That's a staggering 50% of the country's entire labor force. Half the working population, now jobless. An economy just can't function like that. And this wasn't just random damage from a war. No, the strikes were surgically precise. They were designed to take apart the financial engine of the regime itself, hitting the core industrial sectors, petroleum, petrochemicals, and steel, that were basically the Revolutionary Guard's money machine. So the market celebrated that the fighting stopped, and you can understand why. But the one thing it seems to be completely ignoring is the enormous bill that now has to be paid for all this destruction. And this bill, it isn't just going to be a local problem. So that leads to the really big question, right? What is the actual price tag for putting all of this back together? We're not talking about patching up a few buildings. We're talking about rebuilding the entire industrial heart of a nation. According to some of the first estimates, like from the Wall Street Journal, the cost to rebuild Iran alone could be around $250 billion. Just let that number sink in for a second. To give you some scale for a number that big, $250 billion is the same as half of Iran's gross domestic product. That's half of everything the country produces in an entire year. It is a massive economic hole that somebody is going to have to fill. And this isn't happening in a vacuum. This huge bill comes right on top of other major global rebuilding projects, like the tens of billions of dollars that are already needed just to start fixing Venezuela's broken infrastructure. The costs are really starting to stack up. And this brings us to the main idea of our explainer today. Paying for all of this isn't going to happen with some kind of imaginary money. It's going to have a very real, very direct impact on global financial markets. And it's a risk that seems to be completely off the radar for most investors right now. This whole situation creates something called a liquidity drain. The easiest way to think about it is this. Picture the whole global financial system as a giant swimming pool. All the cash that's available to buy stocks and bonds, that's the water. These huge reconstruction bills are like someone suddenly pulling a giant plug at the bottom of the pool. The water level starts to drop, and the market gets starved of the very cash it needs to keep going up. So we'll leave you with this final thought. We're in a market that's climbed a wall of worry and is now just soaking in optimism. It seems priced for nothing but good news. So what happens when this market is finally forced to look at this massive hidden cost? What happens when the bill for all of this finally comes due?